Welcome back to Morning Trade Live. Stocks trying to catch a little bit of a bait here. Tech trying to repair itself after a pretty nasty swoon at the opening bell right after. Rebecca Walser joins us, president at Walser Wealth Management down at the New York Stock Exchange. Been a pretty wild morning here, Rebecca. Maybe we got it out of our system. What do you think?
Oh, I don't know, Oliver. I think that we're due for some pullback in tech. It's been such a huge hype, really, since the end of Q4, since Q4 last year. And anytime, really, Oliver, you have over a 20% or 20% run up in 5 months on the S&P, it's always, every time, ended in a recession or a depression. So I do think that AI has a long runway, tech has a long runway, but I absolutely do expect that we will also be seeing pullback.
The moment we're going through right now, we just had a guest who was selling downside and Apple, trying to bet on it kind of firming up. We had another guest selling upside and chips, counting on them staying under pressure. What do you think that kind of near-term approach is? How do we handle this?
You know, I mean, obviously, you saw sector rotation. I know that you mentioned it with your previous guests. You know, we definitely, when we expect rate cuts in September to be 100%, you're going to see small cap rotation out of big tech into small cap because people have been riding the tech for a while and they think, hey, maybe I need to diversify and this rally needs to broaden out. It can't just be right now. You know, Oliver, if you put in $1 into the S&P SPY ETF, 29 cents of that dollar is going to the top 5 positions. This concentration is unprecedented. And so people are feeling leery, like, oh my gosh, is this like the dot-com all over again? And even though AI is so long-term phenomenal, we're in the very early intro stages, which means monetization of it and realization of it is really right now at the high multinational corporate level. And it's going to take a while to disseminate down to the retail investor.
That's kind of where it seems like Apple is going to be really big because that's kind of the main test of like consumer product. I guess maybe Microsoft too.
Yeah, absolutely. And so I think that it makes sense that the retail investor is saying, hey, it's great to have a tech run, and I think I will have a continuously long tech run, but we also need broader support. I mean, because if you have everybody concentrated in 5 to 7 positions, a substantial, we're talking about almost 30%, and when you add into the top 10, you're at the 37% mark. So, you know, Oliver, this is just highly concentrated, and overall, the fundamentals aren't super great. We're in the middle of an election year. We know globally, we just had PMI contract that was unexpected. So we see global problems with manufacturing. We've got Germany in depression level contraction on their PMI at 42.5. We're at 49.5. We've got China slowing down. So there's a lot of macroeconomic global pressure. And that means that the US dollar also is going to be facing pressure.
Okay, good reminder yesterday with the numbers coming in light, particularly on the manufacturing side. You know, we've obviously got some thorns in our economy, to your point. The next 24 hours we'll get inflation. What do you think of the numbers this morning? GDP, I mean, a decent little beat, but like a really weird durable goods. And what'd you make of it?
You know, it's such a strange report, Oliver. I mean, 2.8% when I just believe that a substantial retraction to the downside will be forthcoming. And it really speaks to the fact that we only expected 2.1%, which was a much bigger number than the 1.3 that it got revised down to for Q1. But when you put that 2.1 in perspective of what's going on with the overall macro economy, you can understand why we're not growing that much. So for it to come in at 2.8, a substantial, you know, upside surprise, and that's with durable goods coming down 6.6%. So it really is a report that doesn't make a lot of sense on the surface, and I need to dissect it more to really understand why we had such a large upside surprise when we have so many other things that are trending downwards.
The market generally, it seems, though, also to your point about concentration in tech, a little bit less macro focused, it seems. Maybe inflation tomorrow. I mean, look, our last couple inflation prints were good, but they also started this whole rotation that's kind of spun out of control in a negative way. So how do we approach tomorrow, you think, Rebecca, with the number coming out?
Yeah, I think you're absolutely right. I think that the numbers were giving us a better expectation of a September cut. And so as September was coming forward, faster and more confident, investors could rotate out of the tech that they were relying on for growth and move into the small cap. So that's when we started to see that rotation. But you're right, it has kind of gone all over its skis. And now we're waiting for that to sort of level out too. So I just would caution investors. I think AI does have a long runway. Tech is a long runway. But this is an election year. We do have a lot of macro global forces. So while investors are solely and squarely focused for growth on tech, and AI, obviously, there's a lot of externality factors that are really going to impact this market this year still, Oliver. So I would just tell people to remember that and just to be a little bit cautious because of that.
Okay. Good stuff. Rebecca, thanks for the chat. Appreciate it. Thanks for coming on.
Thank you.
All right.
Thanks, Oliver.
Great stuff. Rebecca Walser, president at Walser Wealth Management.